So with all the talk about AI and the ethical usage and ethical implications of AI, you might be wondering, well, what has this got to do with me as an accountant? Well, the answer to that question actually lies in the nature of what being an accountant is about, the nature of the profession of accountancy. Because as accountants, regardless of whether you are part of ACCA, ICAEW, SEMA, all of the different chartered bodies have their own code of ethics that you have to abide by. You have to uphold those professional ethical standards. And therefore, you should not compromise those ethical standards by using artificial intelligence. Even if you want to benefit from the use of AI, you need to make sure that your use of AI is ethical, that the ethics of your AI usage mirror and match up with your professional standards. Because as accountants, you have lots of access to sensitive information, you make important decisions, clients trust you and they trust the decisions you make, so it's very important you don't compromise that trust. So let's look at a few specific ethical issues in accounting, particularly in the use of AI in accounting. Well, first of all, you've got to think of your client trust. Everything ultimately reverts back to client trust. An improper use of artificial intelligence risks exposing sensitive financial information. If you use an AI device or you use an AI software that is not secure, you can expose sensitive information. You can mingle information with one client with another. You can cause all sorts of results, and that can cause the output to be incorrect. If you rely on that output, if your client relies on that output, and then they send off a tax return, and it turns out it's full of errors and they get in trouble, that's going to damage their business, it's going to severely damage their relationship with you, and put your firm's reputation at risk. Because, of course, financial accuracy is paramount. If you don't verify the outputs, you can introduce errors into your work. Your clients can use that information. They can make poor decisions based on that information. They may even incur liabilities, particularly with regards to regulations. If they are using AI or they are using information in a way that violates privacy laws, if it's used in a way that violates professional standards, if it's breaching the law, it can lead to stronger financial penalties. Because as an accountant, you have a fiduciary responsibility to your clients and to your own workload. And so at the core of that, when you think about ethical AI usage with a financial and fiduciary responsibility, you need to make sure that the data is secure, that the data is protected. You do not use any tools that are going to risk exposing financial information. And this is something that is very important particularly for accounting firms. So a lot of accounting firms, they don't have an established AI policy. They don't have AI accounts with OpenAI or Copilot, whatever it might be. So individual accountants end up using their own accounts. Now, these personal accounts are not private. Anything you put in can be used by the large language model. In theory, information you put into that model can become an output for someone else using that same large language model. So very, very important that you encrypt the data that you enter, either by specifically telling GPT not to remember this, or by using an upgraded account that has security settings, or by using a personalized GPT that doesn't help train the large language model, and just using a specific personalized GPT for that specific client. Because if you're putting in bank account details, salary information, other confidential data, etc., who knows what's going to be done with this? And that's especially important as well when it comes to vetting AI providers. Now, you trust your business, you trust the major software companies like Microsoft, for example. But do you trust third-party vendors? If you're on PowerPoint and you look at PowerPoint apps that are integratable with PowerPoint, and it's loads of third parties that are promising open AI integration with PowerPoint, etc., it's not actually a Microsoft product. It's not actually an OpenAI product. It's just a third party. Do you trust that third party? How can you trust that third party? Make sure you vet any AI provider thoroughly. Check the contract. Check what is going to be used, the data is going to be used for before agreeing to anything. Make sure you safeguard data as well. The impact and the potential for a breach of information is enormous. And it's not something that is optional. It's part of your duty of care as an accountant. And again, this all goes back to this idea of client trust. You want to make sure that the client trusts what you are doing. You want to prove to the client that these systems, the software that you're using, is trustworthy as well, because trust is the foundation of the accountant-client relationship. So in summary, ensure proper safeguards to prevent exposure, which can cause damage to your clients and damage to your professional credibility and the credibility of the firm that you work for. Another key concern here with regards to using AI in the accounting profession is with regards to accuracy and reliability. So, for example, you use ChatGPT or Copilot, whatever it is, to analyze financial information. Now, the AI outputs will have calculations, it will have suggestions based on your input. But how do you know that it's accurate? An unethical use of AI would be to use this information without any kind of verification, either by using your own expertise to check it or by even asking the AI model to check its own figures, or to take it out of one AI model, put it into another and ask it to check it. Take it out of Copilot, put it into ChatGPT and ask it to check the information. That's another way you can do it. But ultimately, you need to have a human to verify the outputs. You cannot rely on AI alone. Any kind of excuse of, oh, well, I trusted the AI. There's no such thing as trusted the AI as an excuse. A human must review the content, and you must provide that final approval based on your expertise. You cannot just use the AI. And you might be wondering, well, what's the point then? If I've got to check it all and do it all anyway, what's the point of using the AI? Well, the reason for that is because you still need to check the information, but it don't need to necessarily be involved in doing all of the legwork to create it in the first place. Just as we use computers rather than pen and paper, which took a lot of the effort out of it, just as we use software to do invoice and bank reconciliations, etc., it's a tool. It helps do some of the work, but you need your expertise to input it correctly and to verify it. So just there to summarize, that unverified calculations are unethical. You might think, well, an unverified calculation, that doesn't necessarily sound like something that's ethical in a traditional sense, but it goes against the accounting ethics of professional standards and integrity. AI errors can be difficult to detect, and you need to make sure you check and verify before proceeding. And lack of understanding is never an excuse. AI-driven work must meet all the same standards as all other work you create. So just got a quick thing here, the trust equation. Remember that the client trust is the foundation of the relationship. It's not to say that they would be disappointed if you were using AI and it would be a breach of their trust, provided you are transparent in your implementation. You let people know that you have used AI, but you have verified the figures. So you've improved your efficiency by using AI, but you've still verified it. You've used your professional expertise. You're not replacing the role of an accountant with AI. You are just using it as a tool to make the accountant's job more efficient. Because in theory, you can achieve a competitive advantage by effectively and ethically implementing AI. And using it ethically builds trust. A KPMG survey showed that 74% of consumers trust organizations that demonstrate AI transparency. That is to say, they weren't put off by the fact they were using AI. They actually appreciated the honesty that they said, we used AI to create this. It wasn't our expertise, it was the AI's expertise. It's also important to remember that with regards to the accounting profession, there are significant regulatory and legal stakes. Accounting is a very heavily regulated industry, particularly things like tax laws and audits. And so any AI implementation that violates those laws goes against the standards of the professions. And remember that the regulators hold you, not the tool, responsible. So it's on you to make sure that you are using it correctly. You can't turn around and blame ChatGPT for your poor calculations. So whilst accountants can use AI-powered analysis, they must use it in a way that maintains compliance with confidentiality and regulatory requirements. So how do we balance this new innovation with our accounting ethics? Well, of course, we have to be open to embracing new technologies. It's a very fast-moving industry and one that we can quickly get left behind if we do not adapt, if we do not innovate. So we need to make sure that we are looking out for new technologies, but we are evaluating any potential implications of any AI tools and establishing effective safeguards and an appropriate approach to implementation that allows us to integrate and implement these new tools, but in a way that is not compromising our professional ethics. Because, of course, there is an advantage to be had here, particularly if you use AI ethically. You demonstrate your commitment to your client's interest. You show that you're taking every step to protect their data, to protect their information. You are also standing out compared to those that use it carelessly. And you are also showing, you are demonstrating that you are mitigating the potential risks of using AI. You're embracing the new technology, but you are mitigating the potential risks of it. And that's good for your clients and also for you and your company. Because remember, the core accounting values are at stake here. So we think about some of the core principles of the various different accounting ethical principles, things like being accurate and meeting professional standards. So using AI to help with your analysis, but verifying that to ensure precise financial reporting. Make sure you are protecting client data when you use AI, and that pairs up with the idea of confidentiality. Make sure you're honest in your communication. So that's an integrity issue there. And also make sure that you're always evaluating critically anything that is outputted by the AI as part of your professional judgment. So in a sense, in short, AI is important to the accounting profession, but it must be used ethically to preserve the profession's core values. And as technology evolves, the accounting ethical principles remain the same and thus need to be applied to any new technology.